Hello and welcome to another update video about Casper. The Casper chart is in an unchanged situation, but we had a nice reaction here to support. So at least sort of to the area here around the 78.6 to 100% extension of the A wave to the downside. Okay, so it's just Fibonacci micro support. What I just want to communicate is we have two scenarios. They are both still bullish and allow for further upside. Condition is that the 5.9 cent level is holding. That's already quite deep in case wave 4 in the yellow count is unfolding, but the 7.1 cent level should hold. So ideally that level holds. I would already start to shift a little bit more bearish below 7.1 cents because the golden ratio level would be quite a deep pullback for a wave 4, but we have to allow for it because this move up is not impulsive, but could be a diagonal, so I have to allow for this wave 4 to go a little lower if it needs to. Yeah, oops, not that low. Okay, that means, of course, it can go lower. It's just that below 5.9 cents, different scenarios are probably have to be on the radar. Now, at the moment, there's no reason to really focus on that because we're holding above support, way above support, not even close to 5.9 cents or even 7.1 cents. So let's talk about the two scenarios that I have on the chart. It's basically one scenario, okay? It's just that two different ways how this pathway could unfold to the upside. So I'd still like to see one more high. I think I mentioned that in the last video already in wave 5 of C. I'm tracking here a large A, B, C structure on the Kaspa chart. The C wave is a 5-wave move. The 5th wave could be unfolding. And it consists of a 1, 2, 3 pattern, okay? Wave 4 might have bottomed on the 23rd of January, and we might be in wave 5. And if wave 5 is unfolding already, then it would most likely be an ABC structure, in which wave A looks like a 5-wave move, topped here at around 18.7 cents. That was on the 20th of February, like a month ago. We had a pullback that could be a B wave. Yeah, could be a B wave. So I'm watching here for that potential B wave maybe to be complete already, yeah, and then the C wave could have started, but I don't have enough action here. But it looks a little bit as if the C wave could have started, and if that's the case, then the C wave should reach 24 cents. It's the 100% extension level. Now, any break below that last low, which was here on the 19th of March, any break below that level would shift probabilities towards the yellow count. Again, it's the same scenario because in both scenarios I'm watching for further upside. And in both scenarios it's just the same wave degree as well. It's just that in the yellow count, the wave 4 is likely still unfolding. Because this wave 4 was quite shallow. In the white count, the wave 4 bottomed already. In the yellow count, the wave 4 is still unfolding. Again, similar wave degree, same structure, just the way the correction unfolds or unfolded is slightly different between the two scenarios. In the yellow scenario, as I said, this wave 4 is likely still unfolding, but it doesn't really clearly look like a C wave to the downside. It could always be a WXY structure, and this Y wave is an ABC. And therefore, I said if we get a break below that last low here, which was at 11.5 cents, then this would shift probabilities towards the yellow count. That doesn't mean we have to necessarily assume the price will come down to 5.9 cents. I would actually say probably, looking at these Fibonacci extensions, the white Fib zone levels, they are the Fibonacci levels that are relevant for a target for wave C in yellow. And they, a very relevant one is 11 cents, then 9.7, 9 cents, and 7.9. Ideally, we don't even go below 7.9, to be honest. There's a difference between targets, which these are. So they are the relevant projections for wave C in yellow, and just standard support, which is highlighted in orange. That allows for more space, which we technically have to allow for, but there are additional levels to watch, levels of interest that are highlighted there in white. And it just means that even if the white count gets sort of less likely, the yellow one might basically just form a marginally lower low below the low that already formed here around the 20th of March, 19th of March. Yeah. So overall, I think there's no clear evidence that the correction is finished. It could be. I'm still watching for higher prices If there is another low below the last low, then it might just be a marginally lower low. And yeah, no sign that something more bearish is unfolding here. For anybody who wants to scale in, I mean, you can use the entire zone to scale in. I sometimes show the triangle pattern here on the chart, like not pattern, but basically using this entire zone to add positions. And when we then get a rally to sell, and often these counts fail, or they, especially when we're dealing with diagonal patterns and the price tests support again, then it's time to buy again, sell, buy, sell. That the range is defined, the support range is defined. So yeah, that's just one of the ways how this could be traded. That's my update about Casper. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.